I think it's a great question, Brock. I think a lot of people, we've had a lot of change over the last few years. I mean, let's face it, right? So it's not something that's new to us. I think that there's so much going on right now, whether it's politically or with people's employment, financially, just everyday cost of living. It's really hard to make short and long term decisions in the housing market right now. I mean, it's something that people need some settling in some of these major aspects of their life to be able to provide that clarity. So for us as mortgage professionals, we've always spent a lot of time really focusing on everyone's unique situation. What are your short and long-term goals so that we can, formalize a strategic way to help you with your financing. But even more so now, we're really sitting down with people and speaking to them and holding webinars and seminars and really breaking down some of what the challenges that people and concerns that people are facing right now when it has to come to tariffs and understanding, because that's changing and a moving target every hour right now, which I know Bruno will talk a lot about. But how are we navigating inflation and interest rates? And we can say that things look very uncertain, but also there's an analogy too that when there's bad news in the U.S., there's good news here in Canada, and we have seen interest rates drop over 0.25% in 5-year fixed rates since January. Bank prime has come down 50 basis points this year. And we can say the educated forecast, because it's hard to do that, but there's still market sentiment that we're going to continue to see bank prime come down. So we're seeing actually more momentum in the housing market over the last 30 days. We're seeing more people not only list their houses, but actually buy, which is very strong in the last 30 days because interest rates have come down so people can afford it. And the people that have been sitting on the sidelines waiting for rates to come down have been seeing that and then taking advantage of it, especially when there's uncertainty in the market, because people want security in housing. They want to have a roof over their head. They want to make sure that they've got that foundation set now in case of something happening. So that to me shows some optimism, and there's still an overall forecast in real estate in Kitchener-Waterloo that values will go up about 6% this year, regardless of what's going on with tariffs. Now, again, that is a moving target, so it can change. But there's certainly been, I think, some strong activity in the real estate market the last 30 days.
And good information for us to get out there as well, too. Bruno, when you're looking at all of the changes that are going on, I would think that you're a lifelong learner. Is it hard to keep ahead of everything? We talked about the fact that we really don't know what that next decision is. Can you look at things and start to find some patterns and go, I think I'm starting to figure these things out?
So, I mean, it's very difficult to do. When we look at the Fed in the U.S., so last week, I believe, the Fed met, and Jerome Powell, who's the head of the Fed in the United States, has used the term uncertainty and tariffs numerous times. And even the Fed in the United States has said because of this uncertainty, they're not going to change their rate. So the Fed funds rate is about 4.5 right now. Yeah. They didn't change it. The meeting before that, they didn't change it. Yeah. So they've left the Fed funds rate alone, not bringing it down simply because of the uncertainty. So when there is uncertainty, unfortunately, people, be it Jerome Powell, who runs the Fed in the United States, or even a person potentially looking to buy a home, a lot of times people, they just go to the sidelines.
Right.
Wait for things to, wait for the dust to settle, so to speak. Wait to see some clarity in what's going on. So in the United States, what we have is what is dubbed Liberation Day.
Correct.
For those of you that don't know what that is, that's April the 2nd. They couldn't make it April the 1st because it was, that's...
He's superstitious.
So April the 2nd is when the United States, apparently this administration is going to advise the world what these tariffs are going to actually look like, and maybe we'll get some clarity in terms of what they will be against Canada. But when I say against Canada, it's really against Americans.
Right.
Tariffs are taxes that Americans pay. In simple terms, the importer pays the tariff. Right. So an American will pay the tariff, American business that's importing steel from Canada, that American importing the steel pays the tariff. Then they decide on how much of that are they going to transfer to the buyer after they produce the product that they make. And there was a study of CFOs, and the CFOs responded that on average, that 73% of tariffs are passed to the consumer.
Right.
So sometimes it's 10%, sometimes it might be 9%, sometimes it's the whole thing. It all depends on what they can afford to do. If they don't pass it to the consumer, then they make less profit relative to where they were before because their costs have increased because of the tariff. So how much will they pass through? To what will that impact inflation, which is another concern not only for the Fed, but also for the Bank of Canada here. On April the 16th, I believe, is the next Bank of Canada meeting. And if we launch retaliatory tariffs, to what extent will that be inflationary? So that's a concern too. Not only with the Fed, but a worldwide trade war that could be started on April the 2nd in terms of people getting on the so-called Liberation Day. So that indecision and uncertainty is weighing not only on the Fed in not moving their rates in the U.S., but also I think on a lot of Canadians in terms of what are they going to do. And I think Tracy's bang on when she says that, hey, rates have come down. I mean, right now you can get fixed rate mortgages based on qualification, of course, at 3.99. So we're under the 4, and that's the first time in a very long time where we've seen those rates being that favorable in terms of being able to buy a house. And CMHC has changed some rules. First-time home buyers can now get 30-year amortizations, which will significantly lower the payment. But I'll pass the specifics to Tracy.
You've got to go back 100 years when the United States and the idea of isolationism, where we're going to build up ourselves and the rest of the world be damned in some ways. But then this whole notion changed where they became the police of the world. Do you think this is what Trump's idea is, that we're just going to pull back and go back to, well, he keeps saying make America great again, but to at the expense of everyone else and not really worry about being that sort of police state or that police country going out and making sure that everything else is running properly in the world? It looks like he's just kind of saying, we're just going to look after ourselves right now.
I mean, if that's the argument, I mean, I can't really say, but I think we can all agree that the United States of America has done very, very well with free trade agreements and so on. I mean, people have to understand that if you exclude energy, the United States runs, I believe it is a $60+ billion surplus with Canada. So this notion that Canada's taking advantage of the United States isn't true. They need oil and gas, and if the surplus is otherwise positive $60+ billion, I mean, they got a great trade agreement with Canada. In the services sector, which the United States does very well in, it's $18 billion surplus with Canada. So they're running these massive surpluses with Canada, just strip out energy, which they need, obviously. So it doesn't make sense that you would launch, in my opinion, a trade war with Canada when you're running these massive surpluses in goods outside of energy and the services sector. So these are things that don't make sense to me. Isolationism, I don't think, works well. I mean, I think when I think of an isolationist country, I think of North Korea. And I mean, they're not doing that great. I think South Korea does a lot better because they have trade agreements and so on, and they're able to trade goods freely with other nations, and that helps not only South Korea, but them. They always say a trade war is a lose-lose. I mean, nobody wins in a trade war. They win with trade agreements like the USMCA, which is the trade agreement that Canada signed with the United States in 2020, and the current president was an architect of and signed and accepted that agreement and then boasted how great it was. So that agreement, but it is pretty great though, when I just talk about the surpluses outside of energy.
Absolutely right, Brock. I think you definitely are seeing more listings. I mean, but that is traditionally what you're seeing and what we are calling our spring market right now. Speaking to a lot of real estate agents around the community just to get where the sentiment is when they're speaking to clients that are selling or looking to buy, and even on our end as well. Most people right now are concerned about employment, right?
Yep.
So when they're looking at selling or buying, it's the employment concern and the future of what that looks like. And a lot of it has to do with what Bruno was talking about, is what the impact of tariffs and what that's going to look like, because it is so uncertain. So when we're seeing the listings, a lot of them are for various reasons. One is mortgage renewals that are coming up. People are looking at, interest rates have come down, and I'm going to go through a bit of that. But still, there's payment shock there.
Right.
Are people on, maybe at this point, on retired income, so they're on pensions, a set income, they need to downsize, or they're looking at still moving out remote. We are actually seeing some people moving out of the city again, moving up north or to different provinces that are less expensive than Ontario. Or moving into a bigger home because more family members are coming into
Right.
it. And that's a big one, right? So I think this is why we're seeing the activity in the market. Part of it is interest rates coming down, right? So we've seen interest rates come down quite a bit, and continuing to see that, and which is really, and I have always said this, over the years, is that, lower interest rates drive our economy. It drives our market, right? So that's positive news to see that. And the amount of sales have gone up. Almost about 100 sales in the last 30 days, and we're not even at the end. I don't have the full stats for the end of March yet, because we're just getting to there. So, the number of active listings in our area is about 1,800, which is up probably about 200 from the month before, which is, it's a lot. But having said that, it's supposed to be spring market, so let's not take it out of context either, right? I think we have to kind of see where interest rates play, where where tariffs go in the next 30 days to see, and people's employment, right? What that is.
Right.
But when we looked at it, and I spoke to real estate agents about multiple offers, because there's a lot of that conversation that we're seeing that again. The multiple offers are in that sweet spot of that price point between 500 and 800,000. You are able to get detached homes in that price range, right? So it's becoming more of a favorable property choice, as obviously a detached home.
Yep.
It's more affordable, and interest rates have come down. So it's becoming, where we're seeing people still have strong employment here, rates are coming down, and those multiple offers are coming in. Now, what's slower is the condo market. We're seeing almost 6 months supply in the condo market, which has drastically gone up over the last few months, because again, condos, you've got condo fees and they're higher. The average condo, price point right now is in the low 400s. But again, if you can get a house or a townhouse, between 550 or 600, you're going to do that before a condo. I think condos are going to be the last to pick up.
Okay.
But I think as rates come down and we get some settlement at some point in the economy, the election, we see an end to the election, we actually get an acting prime minister, and that's going to, represent Canadians. People will have, I think, some more clarity and probably calmness in that perspective.
Okay.
And then from the rate side, just to kind of touch on that, we've seen interest rates in the mid 4%, higher 4% in the beginning of January, and now we're actually under 3.99 now. Right. So on an average $500,000 mortgage, you're saving, if you didn't take your fixed rate in January, and let's say you took it in March, you'd be saving about $125 a month on that, right? So we're seeing, and I haven't even touched on variable rate mortgage, because we're seeing more people go into a variable rate mortgage product because rates are coming down. So that's good news overall on that. It's helping people manage the renewal coming up. The payment shock isn't there. It's helping people qualify for housing in our market, and be able to manage those payments. And then we've got a lot of programs that I'll be discussing further on in this program on some features to help people do renovations to add on income suites. So I think the market's strong. The forecast is still about a 6% increase in values. And I think we don't have the supply and we've got the demand in the market, right? Which will dictate that.
If you've got first-time home buyers or younger, let's say younger people in trying to get their foot in the door, are people taking advantage of 30-year amortizations? Are they looking at that saying, let's just get started, and if once our incomes increase, we can increase our payments as well too? Is it people taking advantage of it?
Absolutely. That's a great point. We've got a lot of people utilizing the 30-year amortization. It was a great change that the federal government implemented last year in December. It's really helped a lot of first-time home buyers and buyers buying existing houses and new builds to be able to afford that payment, because again, from where rates were 5 years ago, we still have higher interest rates, right? So, and values have still gone up, even though we've had this hockey stick of values increasing and then going down. Overall, we've still seen a strong value on a property in Ontario or in Canada. So having the 30-year amortization, you're seeing payments come down between $300 to $500 depending on price point. That's helping people from affordability. From an income perspective, you don't need as much to qualify on a 30-year amortization. And it's also helping people with the 30-year, you can buy a house with less than 20% down, up to a price point of 1.5 million. That cap has increased from $1 million. Right. That was effective December 15th. So when people are in those GTA areas or Vancouver, or even in our area, if you're buying and you're a first-time home buyer and you've got multiple people in your family that you need to have that bigger home, and you need to go slightly over $1 million, now you can do that with less than 20% down. And you're saving probably over $200,000 in a down payment because you don't have to come up with that. You can put it, it's a sliding scale, so it's 5% for the first 500 and then 10% for the remainder. So it might work out to be about a 7% down payment. So there's a lot of savings there and a lot of affordability options for people.
Always important too to be go through the pre-approval process, right? To say, hey, what can we actually afford? Let's not over extend our reach and go beyond that as well.
Mm-hmm. Absolutely, pre-approvals are a huge advantage. I tell everyone to do that. You can't go shop unless you know where you are with your numbers, right? So, and especially in this market, because that price point, there's multiple offers. There's not enough supply. So you need to know your numbers to understand your budget, so that we also understand your income and what could potentially be coming down the pipe, so that we can prepare you. Yeah. So once you know your numbers, we get you pre-approved, then you can deal with your real estate agent to start looking at properties. And that's always been the case for people to do. I think it's really important you understand how much you can qualify for, and knowing it's a moving target, because with interest rates coming down, it'll actually help you qualify for more if needed. Right? So if you need to have that little bit extra for that property that really suits the needs of your family environment and how your family's going to grow in the next potential 5 years, being able to get that pre-approval and knowing that we can adjust that as rates come down is really advantageous for you, right?
I think that the main thing that they have to look at is what Tracy mentioned earlier. If you bought your house 5 years ago, which is many of these mortgages coming due, they would have had probably better interest rates than what you're going to get now. Now, the good news is if you are coming due, your rate isn't maybe as good as it would have been 5 years ago on renewal, but the rates have come down in the past 12 months. Prime has come down from 7.2% to, what is it now? 4.95. Mm-hmm. So there's a significant reduction in prime if you choose to go variable, and fixed rates have also come down from their highs. So I will pass it over to Tracy to talk about specifics in terms of the advantages of your mortgages coming due this year.
Yeah, if you want to jump in, if it's coming up, what's the best way for people to be preparing themselves? I suppose is the best way to look at it.
So the great thing is we've been hosting a lot of seminars and webinars on how to prepare for your mortgage coming up for renewal, which I find really, I think, great is that so many people are actually on top of their renewal. So they are proactively looking at it in advance to see what type of payment that they're having today. Knowing that rates are down, we can help negotiate that right up into your renewal. But people are becoming more proactive in terms of looking at strategies and where they're at today to know basically where they're going to go tomorrow at the time of their renewal. So I think that for a lot of people, the reality is people are holding a lot of outstanding debt over and above their mortgage. When you look at it, like an average individual in Canada is around $21,000. And that's not including like family debt. And I'm actually seeing that well over and above that. So most people are carrying car and truck loan payments because they may have gotten that vehicle during COVID, and those were at higher rates of 7 or 8%. So their payments are close to $900 to $1,100 a month, and that's really hurting them from a cash flow perspective, especially when we've been dealing with higher interest rates and inflation. So, working out solutions for people at time of renewal, it's not just about transferring potentially that mortgage to another lender or bank because of a better interest rate, but it's actually restructuring their financing to consolidate debt, maybe an outstanding balance on a line of credit, a credit card, a car loan, so we can alleviate maybe, and we've done this, like the other day, I alleviated about $3,500 worth of outside debt that people were paying on top of their mortgage, factored it into their actual new mortgage amount. So we increased it to, Bruno's point before, because we are seeing that equity is so abundant with people's homes over the last 5 years if they haven't touched it. So that house that, they bought in 2020 that was worth $583,000 is actually worth $767,000 now. So we're able to increase the mortgage, pay off the debt, and that rate that they had, 5 years ago at a 5-year fixed of 2.49%, we're actually seeing now, on a refinance rate is, slightly higher on it's about 4.3.
Okay.
So even with a higher interest rate, consolidating the debt, they're actually able to save on their payments by over $1,100 from what they were paying before, because we're helping alleviating that monthly cash flow expenses that they're having on these debts. And this is where we're restructuring a lot of people's mortgages at renewal. So it's not necessarily about transferring balance as is, but strategies, right? To be able to look at how we can better manage people's financings, knowing we've gone through COVID, we've gone through high inflation, and that's what I'm actually seeing a lot of right now. I think also helping people prepare for, if you are in an industry that's going to be affected potentially by tariffs, how do we restructure now? We're breaking a lot of people's mortgages even before the renewal, because people that are in interest rates of 5% and higher, because rates have dropped, we have cashback mortgages out there that can offset penalties and get people into interest rates that are almost 2% lower. And that really helps them alleviate that cash flow problem, and also be able to pay off their mortgage faster, right? And work on strategies of maybe increasing amortization to help with payment shock, but also be able to give them some breathing room because we're able to break that mortgage and get them into lower rates, and it's not actually adding on to their mortgage amount. So there's different strategies, and there's lots of mortgage rules when you're up for renewal. So people can't just look at an online rate and think that's what they're going to get. And I tell this to people all the time. It's tiered pricing depending on what we're doing. If we're doing a straight transfer, when did you buy your house? What was the value of your home 5 years ago? We can utilize that. We can look at increasing your amortization. Are we looking to refinance? So you can't go with one type of rate that's just on a website. You have to speak to a mortgage professional to really break that down.
And I think we've talked about this before as well too. A generation or 2 generations ago, maybe it was we always dealt with this bank, and it was my parents' bank, and it's my grandparents were banking there. These days is the benefit still there to be that loyal customer, or it makes more sense these days to shop around and see what's out there, because at the end of the day, and you mentioned that idea of breathing room, that's what people want. They want to be able to look at the end of the month and say, there's still money in the bank, and we're good to go.
Exactly. And I think it's people want they want hope, right? And optimism. And we can say that now, with bad news in the economy, what's going on, there's, it's good news on interest rates. Again, no one has a crystal ball on exactly where we're going to go. But right now, from most market economists out there, and Bruno can talk more on this, we're seeing that trend of interest rates coming down, bank prime coming down. I think there's a balancing act on how much they can go, but we're seeing that trend and that cycle, and we've seen this before when we've had high inflation and start to go into a recessionary period. Potentially, you were starting to see rates come down. That's going to help people, all these mortgages coming up for renewal, be able to get into better interest rates, or get into a product where then they can eventually lock into a lower interest rate as rates come down.
You bring up the point. So the Bank of Canada, their announcement back on the 12th was a 25% basis point decrease. So policy rates at 2.75%. Do we expect that the Bank of Canada is going to hold that pattern for a little while moving forward, or we got to wait to see what happens on April the 2nd? And then who knows? It could be a fair game at that point.
I think you're right in mentioning April the 2nd. So the Fed in the U.S., as well as the Bank of Canada here, is very data dependent. The last inflation number that came out was 2.6%, I believe, in Canada. The Americans are at 2.8. So every central bank, be it the Bank of Canada or the Fed, has a dual mandate. And it is inflation 2%
Right.
and maximum employment. The United States at 4.1% unemployment probably can meet that very close to full employment number. Canada is at 6.6. Now we've improved,
Right.
and the GDP numbers came out, and they were very good. I mean, this is rearview mirror stuff. But the data that's come out in Canada has been positive, and that GDP number in Canada, I think, is positive. Thank you to the Bank of Canada lowering rates
Right.
to kickstart the economy. Inflation in Canada, that 2.6%, is a bit of an anomaly because of the tax holiday
Right.
that we had. That caused that number to be a bit elevated. So some important dates would be April the 2nd to find out what the tariffs will be, if that's one date. But April the 15th is also important because that's when we get Canada's inflation number and see if that 2.6 was an anomaly, and hopefully that inflation number released the day before the Bank of Canada, because Bank of Canada is April the 16th, will be closer to that 2%. Because we came out of 1.8, 1.9, and then we got the spike to 2.6. So on April the 15th, we should all be hoping that that number gets closer to that 2% or less number. That will help the Bank of Canada in terms of their decision. Always very difficult to predict.
Yeah.
There's tons of volatility. I'm looking at here on my chart, the monthly global economic policy uncertainty index is actually higher now than it was during the peak COVID months.
Wow.
And that's when we didn't really know the extent of COVID. We
Right.
didn't know how serious it was going to be, to what extent would it cause damage and health and everything else. The uncertainty index now is higher than that. So with all the uncertainty that's out there and the volatility and everything, both central banks in the U.S. and Canada are extremely data dependent.
Right.
They want to see inflation getting closer to that 2 number, and they also want to see full employment. One of the things I will add, and one of the biggest concerns out there, is the notion of stagflation.
Okay.
And I'm not predicting stagflation, definitely, but if you Googled stagflation, you would get a lot of hits, and that's not a good thing. Stagflation hasn't been around for 50 years,
Right.
and stagflation, for those that don't know, is when you have high unemployment and you have high inflation.
Right.
And that causes a big problem because, which one do you attack?
Yeah.
Goldman Sachs mentioned when the Fed did their minutes, Goldman Sachs said that it had a very stagflationary feel to it, meaning that the Fed in the U.S. was talking about decreasing growth expectations while increasing inflation expectations.
Right.
And that's a direct consequence of tariffs.
Yeah.
Tariffs will negatively impact the economy potentially by decreasing employment and increasing costs. Again, I always want to reiterate, when Canada responds to the Liberation Day tariffs, we need to do it very carefully, I would hope,
Right.
in
Right.
terms of not blanketing products across the board, because what happens, and I'm speaking just from a social perspective, you're going to negatively impact lower income people and middle income people the most.
Yeah.
I mean, if we go after food, if we go after clothes, if we go after things, from a blanket perspective, we want to be a little more strategic, where you put tariffs on, reciprocal or retaliatory tariffs against products that are readily available and easily replaced with either Canadian products or products that are from other parts of the world that aren't being tariffed. Because tariffs are very confusing to people. If you go and you look at the price of 2 products, you might think that one product is of better quality. because it's $20
Right.
and the other one's 15, well, that must be a better quality. Well, it might not be.
Right.
It just might be a tariff is implemented, and it might actually be less of a product, but you don't know. So we have to be careful, I think, with the retaliatory tariffs, should we launch them. It's up to the federal government, of course, but they've made it clear that they do plan on launching
Doing that.
retaliatory tariffs.
Yeah, I can't believe it's already been a couple weeks since it, right? So a lot of work went into it. Really proud to be able to complete our second mental health fundraiser for the Grand River Hospital, Care Never Stops Foundation. And it was a great success. We had about 200 people there.
Nice.
So very similar to what we had last year in terms of the amount of people, but at the beautiful venue, the Tapestry, which is always a place I wanted to have it. It was a great event. We raised a lot of funds, so about $60,000 after everything and all expenses. Over the last 2 years, the hospital has been so proud that we've been able to host this event for 2 years and be able to raise $120,000 for youth, specifically for programs and support staffing in the mental health division at the hospital. So we're going to continue that initiative into next year, holding it at the Tapestry. We're just nailing down the date. It'll probably be in the third week in February. It'll have a different name towards it. It'll still be Stronger Together, but as everyone knows, the hospital is merging with St. Mary's.
That's right.
So they're going to be under a new foundation name, but still the same people, an amazing cause. And what I loved is just the conversations with so many business owners and individuals in the community that really took their time. And I want to thank everyone so much for their time, their donations, their support, for a conversation and a need for the community that really hasn't taken, I think, enough drive as, what we're doing now. That there's so many other needs in our community that have, and I understand, like, we've got so many other pressing health concerns as well, but mental health affects now 1 in 3 people. So we have to really take a look at what the hospital's reach is. It's over 1 million people over and above this community here in KW. So how can we support the needs of the hospital and the staffing as well? So that is, a passion for me and a real drive of why I foster on and be part of, chairing this event. And stay tuned for obviously more information on it. We'll have it on our website, on our social media. When the next event is, and you can always donate if you're able to during the year as well, because the funds go directly to the hospital.
Well, thanks for taking that on, Tracy, and great news to hear the funds that came in as well too. You touched on a really important point as well too, that idea of mental health, and I think that we've talked about this in the past as well too. When it comes to financial worries, again, go that the generation ago, our parents. I don't ever really remember having conversations with my parents about what are their finances like. How are they? It was just kind of like, we'll deal with them. These are the things that will. Not that it was taboo or anything like that, but we know that they have an impact on if you're losing sleep at night because you're worried about your job, you're worried about paying the mortgage, you're worried about buying groceries. In this day and age, I think it's even more important that we get the supports that we need when we're dealing with those issues.
And we see it all the time. When people are, especially in the environment we're in today, employment is so uncertain for a lot of people. The financial stresses ends up being, mental health crisis for a lot of people, right? So how can we help alleviate that and provide? And that's what we do, with Valko Financial. We spend a lot of time helping people with financial wellness. That's what I say, right? Financial wellness, bringing clarity and helping them, on that path. And that way there it helps them maybe bring a little bit more perspective in a world that, we've obviously got some challenges right now.
Bruno, you were mentioning the idea if you're going to be doing, or you have been, and you're going to continue to be doing presentations. The information that you share, who are your clients? Who do you want to get this information out to?
So when I do presentations and I do them live, it's typically mortgage professionals, mortgage brokers. That's what will happen when I'm up in Blue Mountain doing a presentation during the week. Just educating them on the market. What's going on, be it some data. I'm very data driven, and I think that that's what's most important right now, unfortunately, for those that don't like numbers, data is very critical. So, and that's where the Bank of Canada looks and talks about. They talk about inflation, they talk about employment, they talk about the data and what's going on. And I try to educate the mortgage brokers on the influences on fixed and variable rate mortgages, because there's two different things. I mean, variable mortgages are influenced by the central bank, the Bank of Canada, which determines the Bank of Canada rate. Right now it's 2.75. If it comes down a quarter, typically prime will come down a quarter. Fixed rates are determined by the 5-year Bank of Canada bond yield, which is influenced by the 10-year Treasury yield in the United States. So sometimes the two might work in opposite directions, and you wonder, well, why are fixed rates going up if prime just came down? Because those are two separate influences. And what influences the two of them is different sorts of data. So that's who I educate. And sometimes realtors too. I've done presentations for realtors, promoting, of course, mortgage professionals. I think when I heard, some of the issues of staying up at night, concerned about your mortgage or concerned about your payments, I would always encourage those people to contact a mortgage professional. Let them know their situation. Let them know what their concerns are. What's keeping you up at night? The mortgage professional will look at your situation. They'll do a credit check. They'll look at your income. They'll look at your equity in your home. To Tracy's point, if you bought a house 5 years ago, you might have equity. You can utilize that equity potentially to pay off some debt, lower your payments, and maybe at the end of the day, after you contact a mortgage professional, you'll be able to sleep better at night if they've helped you. So that's what I would encourage them to do.
Okay, good information as well.
Don't be shy. I mean, even if your credit is a bit of an issue, contact a mortgage professional. Let them know, that you've had some issues with your credit potentially, or maybe you've missed a payment on your mortgage or something, and that's concerning. The mortgage professional might be able to help guide you through and help alleviate some of that stress that's keeping you up at night.
Right. I mean, we've said that before. Communication's got to be number one, because if you just stick your head in the sand, it's not going to get better. Right. You've got to find a way to own it, and then you can say, yeah, this is where I'm at, but I've got to find a way to move forward.
And I think that's why we're hosting weekly webinars, right? So we're doing a lot of webinars on specific topics of being able to handle, debt, if you have challenging credit, options and strategies to be able to help you, so that, it's a voice out there for people to be able to listen to and then reach out to us so we can work on strategies, how to look at opportunities to buy in this market. Because a lot of people might not think there is, but there's definitely opportunities with rates coming down and various products and in the broker space specifically that we can do, especially for self-employed people. Actually, we've got an array of different products out there. And then how to navigate your mortgage renewal, right? Fixed or variable. How do you, which way do you go? What's better for you in the next 1 to 5 years and 10 years, and what does that look like? So we're doing that. We're also hosting a live event at the end of the year at one of my office locations. So all that information is going to be on our website and on our social media.